Hey guys, Michelle Kinney here. Thanks for checking in. Thanks for checking out this video. I just want to make a quick video and clarify because I've gotten a lot of comments about I don't want to sell a covered call because I don't want to have stock. If the stock goes down, I get left holding the bag. I don't know why people are saying all this stuff. Now, I want to break it down for you easy peasy, right? Here's what selling a covered call means. You have 100 shares of stock already, or maybe you want to buy 100 shares of stock that you like, right? So a good quality company that you like. Now, we all know that stock goes like this, but over the long term, it goes up, right? So when you sell a covered call, what you're doing is you're taking in premium, so that's income, and you can structure it however you want. Me, I structure it weekly because I like to make cash flow every single week, right? So I sell a covered call, I take in premium, and for that premium, I'm committing to sell my shares if it goes higher than a certain price. Now, you also pick the price, right? And you pick the expiration date. So you're committing to sell your shares if the stock goes higher than the strike price before the expiration date. You choose the stock, you choose the strike price, you choose the expiration date, you choose all of it, right? So me, the way I do it is I do all short-term stuff 1 week because I want to make cash flow every single week. And then also I choose a good stock that I like and I trade the same stocks over and over and over again. And then for the strike price, I choose either, where I bought the stock at or maybe a tad, like a tiny bit higher. And the reason behind that is I really don't care about the increase in share value. What I want is the income. I want the premium from week to week. Now it is true, let's say if I have stock, 100 shares, and I sell a covered call and then the stock goes down. Okay, the stock goes down. That's a paper loss, guys. You don't actually lose any money until or unless you sell your shares. Don't sell your shares for less than what you paid. It's that simple, right? So here's the thing. Let's say the stock goes down, you have a paper loss, and then you can still sell covered calls. Now, if the stock goes down a lot, maybe you won't get that much for a covered call, right? So you won't make as much, but you would still make money. And worst case scenario, let's say you wait to, because if the stock goes down a lot and you want to wait, then you just wait and you don't take in any income for a short period of time until the stock goes up. And you can do a couple of other things as well. For example, as the stock goes lower, you can actually buy more shares and average your cost down. Now, some people have said before, why would you do that? When the stock's going down. Again, you're trading a good stock that you like, right? So we know the stocks go like this. They go up and down, but over the long term, they go up. Warren Buffett, probably the most famous investor of all time, says that if you like a stock at, let's say, $100 a share, I mean, you would still like that stock at $95 a share or $90 a share, because here's the thing, it's on sale. So it's funny how people just don't understand these basic concepts. So that's what I'm trying to explain to you, right? So selling a covered call, sorry, my dog's barking in the background. Selling a covered call, you're committing to sell your shares at a higher price. You pick the price, you pick the stock, you pick the expiration date, you're collecting premium, and worst case scenario, it goes lower. Okay, you still keep the money that you got paid to sell the covered call. Anyway, that's kind of a quick, I think it was less than 4 minutes in this video to break it down. What do you guys think? Put a comment below. Do you like covered calls? What's your favorite stock? What kind of trades do you make? Subscribe to this channel. I'm putting up a video each and every day. Is this helpful? Like it. If it's helpful, if it helped you, send it to a friend of yours. Anyway, I hope this helps. Cheers for now.